Here. This is ThetaWaveTrader. Welcome to the 18th of August, 2026. Let's have a look at the markets and see what we got this morning. So I'm looking for more downside. Today, I'm looking for today to be the low of the week. Unless we see Wednesday continue, then we're going to see Thursday make the low of the week. But here's what I'm thinking. We could come up here and muck around, take out these highs at 10 o'clock. Then I'm looking for a run down into, look at the daily chart here. This is ES. Let's have a look at a 4-hour chart. So this was a Model 3. Extend beyond here. Model 4. I want to see a continuation on a Model 4 here. The problem is we could still run quite high in ES and get back up into this 77.57 area. Ideally, you wouldn't want to see any more than 77.47. Get a little institutional order flow entry drill here on the 4-hour and then continue to go back lower. I can see on the 1 minute we're already on a turn back down. We're inside this little range here, kind of range bound, sitting right in the middle of it. So it's a wait and see game there, but that's a 4-hour and we have lots of liquidity. Let's open buy side here. So we have lots of sell side delivery yet to come. We have swept all the lows here now. Typically you'd want to see that buy signal and go long, but I don't think we're done down there. So let's look at the next one down. Look at the hourly here. Hourly, we've come back up into the mean threshold of the bull trap. It's holding, it keeps rejecting us. So if we take out the bottom of the 3-hour candle, come back into that, we're looking at a long way down for the next 3-hour candle. I think it was, I can't remember where the hell that was down there now. Over here. So 76.37. 76.37. We have a discount array down here still on the 1-hour. So there's more down there yet. I think we're not finished with. We start getting up above the bull trap, start changing my mind on that. If we suddenly get a run up here and we get a close above that bull trap, then the mean threshold at 77.39 becomes my lits for higher prices. So we'll see what happens in the next hour on ES. Now, if you look at the daily chart on NQ. Ignore all that lot. Look what's down here. We have this imbalance down here that's yet to be filled. So my guess is we're heading here for a sweep into that. And if we take that on a close, then I'm all for reattacking this big bull trap we went through once before, came back, tagged it, and went higher, took out the highs, pay yourself, change in direction. We don't get a chance to come back in the year yet. We're just making a big plummet down today into this candle. And I'd like to see us settle low here today. And then we can start running back tomorrow into this bull side. Unless we close below here, then I'll expect to see Wednesday come back into that and then send it lower. Then you're looking for Wednesday to set the low of the week instead of today. So this is my area of watch on the daily side. Let's get back to a minute here. Stretch that out. So this just came back, retested these old lows. Change in direction after taking out little highs. Pop below it. Here's the consolidation. Cam model 1. Or here's the breaker. Trade through the breaker, come back to the breaker, continue lower. Here's the next breaker. We want to see us break through that. It's mean threshold, not just sit on it here. You want to see it roll back over and go back lower here. So now you're just inside this little mess here. That hasn't been tagged yet, so you can come all the way up here, finally roll over. And we still haven't had this bull trap, or sorry, this premium level get hit either. So if we just decide to make a little pop below here, run back up, and get the 10 o'clock clear out both sides of this, and then run it lower. There's a few scenarios we can kind of play with here. Let's say the rest of you. I guess the rest of you is only one other person right now. And thanks for the thumbs up. What's your idea? Where do you think it's going? That's ES. Dow Jones. Let's look at Dow Jones here. See if Dow gets through here. We want to see a breakthrough here. Use this as support. Keep pushing lower. We're going to go lower in Dow Jones. Still got more upside for it's 1 minute. Instead of keep fumbling around with this every time. Look at oil. Got a big old gap sitting in here. With that fully filled nicely. It's a be real careful kind of environment to be looking at right now. That's my area of interest. In the sand for me, if you're going to go bullish, I guess you can get all the way back down. No, yeah, I guess you could kind of reach into here. See what that's like for oil, gold. Let's have a look at gold. You want to see this hold price if you're going to go lower in gold? A small pocket here. Little suspension block up top there. Otherwise, I want to see this break. If we can break that on the downside, that you'd have to break this, but I'd like to see that be the big mover. Displace down, use this candle as support, and start targeting down in your hourly discount. Got to wait for this consolidation to make a move first. Silver, same thing. It's almost identical, hey? You got your premium up here. You got your breaker. We've already traded through it. We've already come back into the mean threshold of that breaker right here. And now you want to see it take out this little imbalance, this price imbalance down here, and then send it lower. And you got this whole upside here. It's still, if it stays in this consolidation, you've got upside all the way up to 66.30. Copper nailed our level here that we're looking at quite a while ago. That's the premium. This is the discount. Wait for a body to trade above it. It does right there. Trades back into it here. And aims for your premium level. First one's here. You break through it, come back and retest it. Reach for the next one. That's a nice little continuation model in copper. I'm just showing you that these models work in every market. Any asset class, doesn't matter. That's copper futures. Okay. You don't get a chance to get on here at all in these days. Nothing here, nothing here, nothing here. Here, rode around inside that, came back into the discount. That's the only clean entry right there off that guy. Right above, come back down, tag it. S&P or TSX composite. Making new highs. Nice. Almost 37. Fuzzy, good morning. Russell, good morning. Morning. Bitcoin. How many of you guys are Bitcoin traders in here? Got a bunch of young people that still love Bitcoin. Is Bitcoin not become your new Facebook? Like, are you guys the old folks now? Because you still buy into the idea that Bitcoin's this great thing to buy? 8 o'clock this morning. Wait for this downside to break and treat it like a no-go zone. Breaks right here. No-go zone. You use it to go lower. Works in Bitcoin. That's a model 1. Trade back into it. It's model 1. Trade into it. Model 1 would be right here. So you have a change in direction. We have a first little switch. Retest. That's model 1. Wait for the discount box to get broken through. Retested. Model 2. Continuation. Now you want to see you're just going from discount to discount. So the next little range, you're hunting for this. So you hit it here. You come back inside that range to the premium, hit the premium, run through, use this again. That's our no-go zone right here. Trade back into it, hit it, look for this level right here. Body trades through it. Come back into the body here. We haven't traded through the wick yet. The wick gets traded through here. Retest it. Model 4. Continuation model. Targeting the next SIBI. Look for the next SIBI down here. If you get through that, great. Then we're looking for a retest of that level. Here it is here. Retest. Aim for the next SIBI. Rinse and repeat, man. Rinse and repeat. That's Bitcoin. 4 models, man, to trade the world. So, see, sugar's got a turn here. If that closes today, if we're looking at this, we're hourly, and the next hour closes there and then comes back inside that, we're expecting to see it run back down into this discount box down here. So we'll put that on there. That has to close there first before this happens. There's premium. Discount. Foreign currencies. Change in direction right here. Right hits right in that 5-minute no-go zone. Right in the consequent encroachment. You get a change in direction right here. Trade back into it here. Go lower. Targeting what? Our discount box. You hit your discount box right here. You just trade back into this order block. Now I want to see this consolidation continue to reach. Oh, I've already reached for this discount down here. Look at that. It was a perfect fill right there. Box to box trade. Now you're keeping an eye on this little cluster of up close candles. You don't want to break that. If you break that, then you want to use this as support to break through the bull traps. Mean threshold, and then aim for that 5-minute no-go. If that doesn't work, you want to see this break. Use these two as support to continue going lower. So then if that's your idea of what you want to see here, go to the American dollar and say, what would support that? What would give me a reference for that to unfold, if that's my idea that I'm looking for today? Then I'd want to see these highs, these equal highs above us get taken and closed, and then this premium level used as support to send that higher. That will push this lower. If I want that to go higher, then I have to see that those equal highs hold price, and I want to see this break, this little open gap here. I want to see that break through that, come back, use this as support, and then start targeting this discount box here. That will allow British pound and euro to lift. And euros right now, in the last 8 hours or so, has been more bullish than the British pound. Now the British pound is starting to pick up. So what's it doing? It's just driving back into this premium level. That's got to hold and send it up higher. So that means this guy should start getting aggressive. And if it doesn't, if this loses and that starts to roll over, then we should start to lose this premium and then start to dig into, there's no other discount down here. So we should start to lose this candle. There's a little tiny imbalance below us here. Discount premium right here. So keep your eyes on this level if you're into Forex stuff this morning. Keep your eyes on that level there to see if it gets traded through. And I'm going to move this to here so I can reference the hour we're talking about that. Changing direction right here. Body trades below it. Comes back in, retest, then lower. You're inside this range now. Pull your fib from low to high, 50%, 62%. Take profit model 1. That's a 5-minute chart. Got to order more pounds this morning. Banks. How's our DAX guys doing? So if you're a DAX guy or gal, let's retest the breaker. You're between this breaker and this one. This mean threshold and that mean threshold. Those two breakers are in a bit of a battle right now. So you got to wait for one of them to break to the upside or downside on the 4-hour. It's a little kind of choppy there. Just looking at some other ones here. Some ones I got my eye on. Ooh, look at that. Welcome to the open. Welcome to the jungle. All right. That is the jungle. Okay, so Fuzzy, good morning. Russell, good morning. Dumb question. Is there new event I'm missing to cause this turn down or just natural market action? That's a fundamental question I can't ask you, man. I just watch the algorithm. Just watch the algorithm. When it turns, it turns. Events, if events are driving it, great. But it still runs the same pattern. You see manipulation moments. Be prepared to be out of the market when you expect those high news event manipulation things like this. Wait for the opens to settle down for a few minutes and then pick their direction. So I can't give you an honest answer there because I am not a fundamentals guy at all. I'm pure technical, staring at the algorithmic properties. When it changes, I respond to the change. If it doesn't, I don't even look at news events now. I just wait for it to, someone says, oh, there's a news event coming up. All right, I'll wait for that chop to finish off and then start looking for opportunities. But just stay on the chart. Just stay on the algorithm. The more you study this, the less you rely on speculation and, no offense, fundamentals. Because if all those fundamentals are correct, the algorithm will change and the markets will show you a switch up. And if you're astute enough, you'll see it. So I know that sounds kind of all the professional traders go, this guy's an idiot. But that's why we're on a 1 minute chart for the last 3 years. We're watching every candle on a 1 minute chart. And again, we're not trying to show you how to predict the market. We're just trying to show you how to read the market as it is on a 1 minute chart. It's the same as reading it on a 5, 1 hour, whatever time frame you guys are trading on. We're just showing you here because it moves quicker. It's not more noise. It's just trading the same algorithm on this level. It's what Michael refers to as that fractality in the market. Every time frame is run by the algorithm, obviously. So we're just showing you on a 1 minute chart what it's doing on a daily chart, hourly chart, monthly chart, on a copper chart or a oil chart, gold chart, doesn't really matter. They all run by the same algorithm. All the time frames run the same algorithmic pattern over and over again. So we're just here to show you and get better at reading what the market's doing during those events. You let it just settle down. You see all this chopping around doing, just wait. Just wait for that opportunity to see a low or high settle in. And then I look for specific times. Time and price is critical now. Here's a 9. 9's giving us a nice little swing. So is 10 going to push us back up through here and then take it lower? Or is 9 setting the low of the day and then starting to push higher? And I still think 9's got some more downtime. 609 to 569 to 529. That was my little community when I was in the community this morning. You saw me make that as my downside prediction. And we're not far away from the first one, which is right there. Let's just get the actual number. Or 615. Is that right? 615? Yep, 615. 615 is the beginning of the downside number. So let's see what we get. So sorry, I can't answer that question for you, Fuzzy. Referring to NQ. Golf day, let's make it roll early today. Oh, Derek, I'm going to come have a golf game with you one day. I don't know how great my back will be, but I'll make sure I buy lots of balls and just keep whacking them all day. Mark, the Marky Mark 3. How you doing, Mark? Good morning, Hadi. This guy's no idiot. Appreciate it. So we'll just wait for this kind of settling down. I think you're my longest standing guy there, Derek. You've been with me since the beginning. That's like 3 years ago already now. Three years. I feel like this relationship's gone on long enough. It's time for us to meet. We were a bunch of young pups back then. So you see we're back up in this premium here, in this large leg now. We've got a discount, a big fat discount here, and we've got this up here. So now let's put in all these no-go zone. I'm gonna get rid of this no-go zone here. I don't think this one's even utilized anymore. We shall remove that. Clean up this mess a bit. This was the is that last Wednesday? I think that was last Wednesday's. Let me have a look here. Yeah. We can get rid of all those. You can still see they provide some sensitivity though, hey? And our today's is up here. So right back up in that premium. So if we break through here, then forget all my lows and saying, oh, look, it's definitely going down here. You don't buy into that. You stay on the horse right here. So you see how we've got this change in direction right now? We have a little bull or a Bissy and Sibby overlap. So wait for a body to break above it right here. It comes back, retests it. So now this one you want to see supported going higher. This one you want to be supported going higher as an inversion. So it comes back down, tags it, sends it up. You pay yourself a rejection block, old high, move yourself to break even. You're in a risk-free trade. Not that I would recommend making that trade that early after 9:30 with all the chop going on. But you know, if you're watching the market and you're watching where our typical setups are going to be, that's the kind of thing you're saying, all right, well, I'm not heading here right now. I'm on the horse and we're galloping across the river and we're heading over to another pasture. So stay on the horse, man. Don't marry the idea that I want my 6:15 yet, because I'm still looking for 10 o'clock to start moving up here now and start giving me a new high. If 10 o'clock punches through here and then sends it lower, then I want to see 10 take out this 9 o'clock low, and then 11, 12 set a new low. Okay, so we're right up in the premium. So we're just staying inside that range we talked about. And now we've got a new swing above this high, these little highs here. We've got a swing up inside the premium. Inside the larger range, we've got a new extended range. And all we're doing now is coming back down into, do we see us trade through that on a close? Boop, comes back, gives a little test, and then now we're running from box to box. Now you get back inside this range again. So the horse has done a turn, seen a rattlesnake, heading back across the river saying, don't like that place. And now I'm starting to go, all right, are we going to retarget my little 115 down here now? If I close below here, that becomes a huge no-go zone that I want to see run for my 216 or 615, I should say. And if we run back through here, then that becomes the new no-go zone for support to finish off the rest of this old guy up here. And then see if we can use this as support to push through here and start reaching that midnight open. And imagine that was on a daily chart. And you took that as a short. A whole 1 day, 2 day. Run down into a weekly range you're expecting to see price run back into, which is no different than what we're looking for right now on the daily chart. We're looking to head into that this level down here, right? That imbalance. That's what I'm looking for. No different than if that was a 1 minute chart, I'd be looking for that level, right? And that's the beginning of it right there. Since we were young, now that I'm 65, I don't know how 50-year-olds can be so dumb. That's funny. It's different generations, man. I even listened to some of the music and I go, why do these old kids, these freaking kids are listening to shitty music, man? What happened to Def Leppard, some good old big hair bands back in the 80s? That was some good tunes. I remember my parents telling me about that from their parents when they were listening to Bill Haley and the Comets and the Elvis Presley. They used to go, Dad, you're so square, man. You're so square. And now I look at it, I go, I listen to the young people music and I go, I don't get it. I don't get it. Some of it's got some good catchy tunes, but anyway, I like the old big hair band days, the rock and roll. Anyway, keep your eyes on this level right here. We're starting to already pop through it already. I like to see that. We're back to loving my target again. You see how it changes direction? And I have no idea about news events. I have no idea about who farted in the White House, who upset somebody, who threw ketchup at the wall. Doesn't matter to me. We've got a change in direction. You recognize it. If you're in a small range, pick low hanging fruit. Wait for the change up. Wait for your next setup. There. See how we've closed below that level? That whole no-go zone becomes an important launch point. So here's the mean threshold of the last down close candle. We're bouncing off of that. Now I want to see a Model 3 trade back into here. There's the start right there. All the way up inside here. Roll over and take that low. Again, it can trade all the way back up in here. Let's mark this out here. I want to see it take these lows. Because we know that if it breaks this on the upside again and we don't get that low, it breaks the upside, we've got this target above us. And if it breaks through that, then we're back on running higher or lower. How do you find your golf? Has your golf aged like your fine wine, Derek? Do you find that you're much more selective in your shots now? You're not more grip it and rip it like you used to back in the youth. You're more selective. The body knows what it wants to do now. Or is it just yelling at you saying, what the hell are we still doing out here? Yeah. So now we've had a retest of the no-go zone. Let's see this start getting some legs and getting down here now. Now, if you're ultra conservative at the rejection block, you'll pay yourself here, then target the low, and then our first objective here. So there's your first one. Now, here's the tricky part. If you use that and you move to break even, if you just got in here right off the edge, or you would go 1, 2, 3 different entry points. So if you just got the first one and you went to break even, you're risking coming back and tagging you out now, but at least you got some cash. You paid yourself a little, you picked the first apple that you came across, and now it would have taken you out there. If you're going a little more aggressively, you'll be just above this no-go zone because you don't want to see it break through that. And we've already targeted our first spot. There's our rejection block. If that pulls all the way back in there now, you'll see why we make emphasis about the rejection block. And always pay yourself at the rejection block. So ultra conservative, pay yourself, and then you go, now I'm going to wait. You can do load back in again at the mean threshold here. And we think this is a bull trap, right? This is another support area. I want to see hold price back and not break through here. So if it hits the rejection block again, then you pay yourself again. So you paid yourself once at the rejection, load it back on again, pay yourself again here, move to break even, and see if it reaches for our low, and then our target down here now. So now you've already tapped this multiple times. I don't want to see it tap there anymore. Just let's get down here and I want to see it bust through here. I want to see it really rip and get down into that level we talked about, that 5, 6, 9 level. What's this old node goes on here? Got to do with anything? Come on, what's it doing here? That's a different day. This is the new HD 830. Where's 830? It's sitting right on top of that 930 first fair value gap. That's on a Tuesday. That means it's supposed to be on a Monday because the 930 is right here. That's the new. There you go. That's the first presentation for value gap for today, which is Tuesday. This is Monday. Okay, did you pay yourself? Are you gonna pay yourself right there? Or are you gonna wait for here? Are you gonna wait for way down here? Ooh, boom, there you go. Ding dong, done. That first target's been hit. And we were calling that this morning in the community channel. So I want to see more downside now. Can you dig it? Do you love it? This is the day that sets the morning glow. Now we want to see us hit the 569. 569. Okay, so the bottom of this daily volume imbalance, that's what we're looking for right there. I don't know why the volume imbalance, I have it set right here because that is not where it is. It actually starts up here. Let's go back and adjust this. That is not where the volume imbalance is. It's up here. That's the volume imbalance. Back to the football game. Bodies, look at the body respecting that. So to me, if it just tags this and starts heading higher, that's my low set of the day. Remember we said we want to see 10 o'clock take out 9 o'clock? That's 9:57. We're about to start the new 10 o'clock candle. So if 9 is set the low of the day and 10 o'clock starts to run this back through all of this, just tagging that downside. I wanted to see this. I wanted to see this consequent encroachment of this. And I've mentioned this to you guys for the last week. And anybody in the community has known about it for months now. If you look for the consequent encroachment of these outer arrays, the premium and the discount arrays inside, or the box-to-box trade, always look at the consequent encroachment as the area of most sensitivity for me. I like to see how we react off of that and whether or not we're going to kick off of it really quick, set their first reversal pattern, and then start picking low-hanging fruit on the inside internal range liquidity hunt. So we know that if this is a swing point, there's a little tiny SIBI right here. We've run up it. We've come through it. We're running through it again. Bull traps here. So the first bull candle to the left is this guy. If we get on top of that, this testing of this volume imbalance is all we've got right now. So then you start looking for a premium attack again. Remember, you got this big ass breaker sitting right here too. These two down close candles. They make this swing that takes out this high. They're the parent run of that whole leg up that takes that high. So that old no-go zone, we finally busted through it. We've come back, we've retested it. So if you want to see that support and us attack this volume imbalance below us, I want to see that no-go zone hold support and drop lower. Otherwise, the bull trap right there is what I'm looking at. How you doing this morning, Russell? How's your intuitive view of the market? How did the ES do? We're still expecting that to come lower, hey? That's a mess. ES is a mess. Gold still hasn't busted out of that consolidation with a nice wick down there. Clean up all the liquidity on the buy side and the sell side. See how they've engineered liquidity on the buy side and the sell side? And then also they went whip, ripped it up there, took it out. So now they've cleared out all the sell liquidity, people wanting to short it, and all the people wanting to buy it. They've cleared them both out in one candle. And that's right at the 9:30 open. That's why you wait for it to settle down. Otherwise, you must have just pull a one-arm bandit and say, I want to go long. Well, it cleared you out. If your stop loss is sitting down there, it quickly cleared you out. You want to go short, it quickly cleared you out. And then took it low, and then came right back up again. So that's why 9:30, you got to kind of just let it do its thing. Silver probably did the same thing. Yeah. Bitcoin. This is a nice box-to-box trade here, man. Copper. I like to keep this one on my chart because it's a reminder of I've held this one for years, this mining company, and I had it up here like 60 some odd cents, and it finally came through and got me out, and I was like, I'm out of this thing, and I took a couple of dollars for a coffee. But I've been in it for years and waiting for it to get back up there, and it finally, a couple of years later, like 3-4 years later, it finally got up there and finally cleared out. Like, thank you, I'm done. And now I kind of smiled to myself thinking, man, I'm glad I got out of there. I'd be sitting back in that coffee shop waiting for the day. So it's a reminder of back in the day when I didn't do so well, when I was just jumping at everything. So how's the euro and that doing? It hasn't come into our level yet. Those are holding. So if this drops, we're looking for euro to start making a run up. Here's your pop up. We've come back inside it. The bodies are respecting it, popping through. Wait for this bull trap. The first bull trap to the left. Break it to the upside right there. Now keep going. Take this next no-go zone. Well, it's not really a no-go zone. It's just we're retesting the fair value gap. So take these highs out on the close, and then that next bull trap right there. And then you can start targeting. Well, it's not too much higher than that. That's hourly side. Let's get back over here. Boo! Look at that. Inside the range, low-hanging fruit. First candle to the left, right here. Wait for body to break above that. And look at your, if you're using Take Profit Model 1, you're just about to hit 62%. And we still have not activated this candle. It's active, but it's not armed. It gets armed when a body breaks above it, and then triggered when a body trades back, or a wick trades back into it and sends it higher, targeting that low-hanging fruit, 50, 62%, 70% off from trade entry reversal. So you'll start picking fruit here at these levels. That makes much sense. So no body above here yet, still not active, and we're already ran through into the 62% range. So this could be just one of those quick runs up into the premium level, gather up some liquidity, still inside the bull or the no-go zone and the first presentation for value gap, and then start running it lower again. So if we get back above that, come into the first presentation again and tag our first bull candle and send it higher, that'd be more bullish for me. And then I wouldn't be really bullish until we get back above that Tuesday 6 a.m. candle. So that's what I'm looking at here. We've already ran that out, so this would be a great time for this to continue to charge lower. I don't know that, but it'd be a good time to see it do that, because we're still supporting lower prices in an area where we're expecting. So stay on the horse, guys. Stay on the horse. What's going on here? More commercials. Jesus. Okay. Let's get low. You mean active as in tagged? No, active as in it activates the moment the wick gets above it. It's active. It gets armed when a body trades above it, so it's armed and ready to go. And you come back and go like a bullet hits a trigger. It comes back, bang, and fires it off. So it's active when you get there above it, armed when you close above it, and triggered when you tack it. It's 1, 2, 3, 4 levels. Line in the sand is that Litz is the midpoint. So any one of those are the trigger. It's the pin that sets it off, right? So if you're 62% and you start to see this starting to form here, see that? This bull, when we say a bull candle, this bull candle that is now a fair value gap. We've traded through it, tag it, right in a no-go zone, an old no-go zone. So you can come all the way back up to the first presentation fair value gap again, tag the edge of that, and then still roll over and come lower. So we're still supporting lower prices. We've just traded back inside this volume for low-hanging fruit to a premium, and now we're looking for a continuation on the downside. And we've got more support building for more downside. And if we break through this, you go, why are you doing that now? Are we making another run on that premium that hasn't been fully filled yet? Is the consequent encroachment of that yet to be tagged, which would be right there at 77.46. So now you've got BISI, SIBI overlap, but this SIBI hasn't taken out anything here, right? So we're into some chop. Stay on the horse. Watch that level right there. We've come all the way back up and filled the BISI. Now I want to see this really accelerate through and down here. And you want to see this level right here at 626 get taken out on a close, because that's the data point. I want to see that on a close get taken out. And if we're looking at our first swing, the first candle to the left, which is a bear candle, when we're going down, that's the bear trap. I want to see the bear trap break, come back and utilize that. And it's also inside the candle I want to see get broken. So a nice down close below here, that one and that one. And then I want to see it, that or that, get retagged and sent lower. And then you've got your support above you here. Right? Does that make sense? And if you're new to our channel, it may not make sense to you if you don't understand ICT concepts and stuff, but I recommend that you go check out his channel. He has got years worth of material there, and it's all gold. It's all gold. I have a friend who's pulled $1 million out of the market since being introduced to Michael's concepts. He likes to, he drives a nice fancy car, smart guy. And he's utilized Michael's stuff to his advantage. So since he got introduced to that, he's found something that works really well for him. And he trades banks. And he's taking care of his future and the future for his kids. And so he's a smart guy. Doesn't have to work anymore. So anyway, see what we're getting now? See how it's all kind of running down to the level we're looking for? Now it'll give me a retest of this level right here. Now again, don't take the trade just because I say it's going to go there. There you go, boom, right on that. Look at that, right to the consequent encroachment. And it's right on a 10 candle. So let's see if this drives through here now and starts to reach for the opposite side of this daily volume imbalance. Because I still see it reaching below that. Because the next level below this, if we fill this up here and we start to pop through it, what's the next? I'll ask you guys, what's the next data point of significance on a daily chart that you'd be looking for? See, yeah, still coming. Still coming. I haven't been watching Kevin this morning. Are we on the same page? Yes, it did. It needed that. Can we get a big bull candle at the open? Oh, you want the bull candle? Where the price? Let's get to. Yeah, it did. Needed that. Okay, so he's on the right page. If he needed that, then that's what he got. All right, good. I like it when Kevin and I are on the same page. He's got a very unique way of analyzing the market, and I love it. And when he and I are in sync, we're unstoppable. Unstoppable. See how how quickly we did not bounce off that consequent encroachment. We just we hit it, didn't smack off of it, just kind of rolled through it. Nice. So tell me the next level. Anybody? Bueller? Anyone? I'll give you a few seconds. Tell me where the next daily data point is. Russell, what's the next daily data point? But you got to know where's your next, like we're talking here about specific points. So we want to see a reverse and we're looking for this target down below us. Now that's great. We've targeted this. Now we want to see it get reused. It did. It went lower. We targeted that. That's our model 4. Or sorry, model 3. We wanted to see it extend. And now we want to see a model 4 retracement. This is a model 4. Retraces back into this level here. And then we get the continuation. So model 3 extension, model 4 continuation. So 536 daily low. You're missing one. You're missing a bunch, actually. Premium of the daily BISI. Premium of the daily BISI. The top of that daily BISI is what you're saying there, Ola? It actually overlaps that data point, yeah. So think about this. And this is where you got to be careful, Russell, because if you pick too many data points that are way past the next logical level to see it reach for, then you could put yourself, you could be saying, why is it not getting there? Because you're missing some key ones, right? So let's go here just so I can show you what it is I'm talking about here. And again, take what I'm saying with a grain of salt. I'm just an old burned out fireman. What do I know, right? So what you want to see now, see how this bull or this this breaker here that took out these highs, if we close below this, I want to see this get used. Well, what's that in lieu of? This little volume imbalance that we saw. I want to see the next, what's the lowest down close candle's mean threshold right there. It happens to be the top of the BISI that Ola was mentioning, but it is this right there. And it also overlaps with a new midnight open range as well. Midnight open range high is actually the consequent, is the mean threshold of this candle. It's also the high of that BISI. So if we start to lose this and it comes back into this, I expect to see this get tagged. So tomorrow, this is what you want to see. You want to see this low formed today. And I want to see this get tagged right here. And then I want to see it bounce off of there. So tomorrow I want to see it just come down inside. So in other words, I want to see it hit here, come back up, close above here, come back, tag that volume imbalance, and then send it higher again. If this is going to be the swing low of the week. If it's not, and we see this close below here, now you have to start saying to yourself, is it going to be the low of the week, or is Wednesday going to be the low of the week? In other words, do I see the open tomorrow come back into this level and then send it lower? And then then what are you attacking? We're attacking consequent encroachment. We always say pay yourself a rejection block. So you'd pay yourself, and it happens to line up with the old open of more, that I don't know what day that was on, last week sometime. Oh, it's right there. Friday's midnight open. Is that an interesting data point? It lines up with consequent encroachment. It lines up with the rejection block. All areas to target, right? And then a nice pullback with a wick in the afternoon today, and then a retest and send it higher. And then what am I targeting for? Box to box. I'm looking for this premium up here. Then I'd be bullish for the rest of the week to try and get back up into there. But if we don't get through here, if we close below here today and we come back up and just tag that tomorrow, and you start to see it break through the low that's set this morning, then you think we're actually going to run for these this rejection block and deeper into this BISI here. And then what I do is I take my, oh man, this is all BISI in here. This is all ugly. Let me just double check this. Yeah, this is all suspension stuff in here. See how quickly it took off? Well, I guess you'd have to be right there. Okay, so 75% will put you here. We're looking at retesting this old breaker and an old bull trap that never got tested. So I always think it's going to come back and retest. I mean, you hear me saying this all the time. If you get these bold candles that go ripping through levels we want to see get tagged so we can catch it and for the run. So in other words, I want to see this one close above this and then catch it, come back, tag it, and send it higher. It doesn't. It actually closes below it, opens inside it, and then runs through it. So we haven't got this one activated yet. We haven't got, and then we just keep gapping up really fast, and we took this one and we never even came back and retested that unless it's right there. Stand by, let me get rid of this. I could be, yeah, sorry, it did. So we came back, retested it, and then send it higher. Took out the high, you pay yourself. No different than if that was a 1 minute chart. We'd be looking for the same thing, come back, retest the breaker, and then go higher. And as soon as it hits the rejection block, pay yourself at the highs, and that would have gone bing, bing. It would have taken you the rest of the week to get there, but you would have got there right off that entry 1, entry 2, Litz line in the sand is right here. And we know that if it closes below that, we're heading for the ones that we did not get retested. Anyway, you hear me saying that on the 1 minute chart all the time. So now you know what it is I'm looking for. So look at that perfect bounce off of the volume imbalance. So now you're looking for any opportunity to catch along here. All right, so let's get back down into that lower time frame stuff. So let's go down into a 1 hour chart. This is meant for a 1 minute chart, so this is way too busy for a 1 hour chart. So there's a perfect fill of that. So let's go to a 1 hour chart here. Oh, hang on a second. Here we go. 1 hour chart, looking for a break above here. There's nothing on a 1 hour chart that shows you a change in direction yet. 15-minute chart. Nothing on a 15-minute chart showing you a reversal yet. So no 1 hour, no 15-minute. 5-minute chart. There's nothing on a 5-minute chart until we break above here. And the 1 minute chart is just showing you the first reversal here. And you're inside this range. So it's box to box, really. Okay. So you got nothing. We got to wait for it to break out of here first to get any sign of bullishness. So 10 o'clock is now set our low. We're in that 10 o'clock. We said that we wanted to see the 10 candle run through and take out the 9 candle. So it took out the 9 candle high and took out the 9 candle low. So now 10 o'clock has set us a low. So now what you want to see is if this is a 9-10 turn or a 9-10 turn, I want to see this start to really get aggressive now and take off higher. Because if 11 takes this out, then we're looking for much lower. I wouldn't want to see 11 o'clock set the low of the day. I want to see 12 or 14. Coincides with the low round. Sorry, I missed all that conversation there again, Russell. Now I'm looking for, if we break back through here, look for the consequent encroachment or the top of that BISI, or sorry, mean threshold of that last down close candle on the daily. And we're looking for any sign of a reversal now. And now you know the consequences of if we don't get that reversal, what we're looking for further downside tomorrow. Anybody got any questions with this stuff? If you like what we're doing, give me a thumbs up. If you like the analysis, give me a thumbs up. I do appreciate it. Like, subscribe, you know, the whole 9 yards if you like. We don't have a huge following, but we do have I like to see these people that just come in quickly, say, are they taking a trade I can copy and get in? Are they making money? Nope, I'm out. We'll go look for somebody else. We're sharing all the models, all 4 models with you. It's free, doesn't cost you anything. There's the premium, discount, premium, box to box, done, 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 boof. Low hanging fruit. That's my box to box trade right there. Done, done. Now you got to wait for Model 3, Model 4, continuation, extension. We emphasize quality over quantity in this group. Yes, indeed. Yes, indeed, we do. Yeah, I chopped a lot of people. If you look at the numbers we got in there, Derek, we used to have like 200 people in there. We're back down to like 30 some odd people. Because people just come in there and they watch Kevin and Adi and Russell and Lambo and Lucas and you do all the work, and then they just do nothing in the background. So it's like, well, you've had months and months to participate. If you don't, you're gone. That's not how communities work. So we're down to 30 people, probably a few more there to chop out yet. But I've had a few people say, hey, did you just cut me out of the thing? I was like, well, yeah, if you're not participating, what are you there for? Well, I'm busy. I'm doing other stuff. Well, that's cool. I get it. I get it. If you're doing other stuff, but I see you popping in all the time, but you're not contributing. You're not helping. So communities can't grow just watching 2 people do all the work or 3 people do all the work. So cut out some of that. Then I don't even put the link in the, it's not even in there here anymore. It's just invite only. If people are really serious, they can hang around in here for a while, ask a bunch of questions, and if you want to join the community, you can. It's not exclusive bunch of people. It's just people that are dedicated to making it work, working with each other, learning, growing. That's what it's all about, man. Got no problem inviting anybody, but you got to do your shit. You got to participate. So you see, anyway, you see this premium's broken now. Now I want to see that continue going higher. So we're starting to set up our run, and now you want to see this first candle to the left after taking a low in a premium level, in a higher time frame level. I want to see a reversal in. There's your first indication that we're starting to get our reversal off of that higher time frame objective. So if you're really bold, you put your entry in there, your stop loss will sit there, and the moment you take that high, you move your stop loss to break even, you pay yourself, and now you're in a risk-free trade at the best, most high likelihood that it's going to go higher. And if it does continue to go higher, you've nailed it to a level of precision on a 1-minute chart that very few people see or even understand. See how that one's been activated? It's been primed, and now all of a sudden it's been armed. It's armed, and now you're firing it off. Trigger, boom. Inside this guy here. Now I don't want to see, your stop loss would be sitting there. So if you were entered in down here, your stop loss sits just below here. Right? It just sits below there because I don't want to see this get broken to the downside now. And I don't want to see this premium level get traded through. If it does, then we're back into Chopsville again. So there's the first indication of going into a consolidated market. When that premium level gets traded back through and you trade back inside that range again, after getting a full indication that you're supposed to go higher. Demand from the market what you want. Don't settle for trading back through that level. That's why your stop loss is sitting there saying, I'm not taking any losses there. I've paid myself at the rejection block. And if that rolls over and comes into a consolidated market, I've already paid myself low-hanging fruit inside here. Box to box trade, paid myself. Coming back inside, I'm going to go long again now. That's a Model 3. If I take out that high, that's a Model 3 paid. Model 4 brings me all the way back into no more than that for continuation. No different than what we saw back here. Traded, that's a Model 4 for a short. Same kind of thing on the long now. Give me 5-minute close above 673. Yeah, I don't care if we just got 3 people in there. As long as it's dedicated people that love trading, and they love learning, I'll just take a couple. Don't matter to me. So you see how this is the new premium level inside here. Discount, premium, run above, rejection block here. So watch how this acts inside here now. See how many times we've bounced around on that? You don't want to see that. You want to see it, tag it, and go. If it's really aggressive, get the hell out of here. That's why you constantly hear us say, I want to see there's some legs now. I want to see a big green candle. It means it's done its work, and I want to see it leave. So this is the Model 3. I want to see it take out that high. Remember, your stop loss is sitting down here. See how we're coming back? We ran up there, and it paused on 30, so now we've got Crazy Ivan started. So this is the time you can see it start to drift all the way back down in here and start hunting. And you have to ask yourself, do I want to keep playing in an environment like this? Well, you've paid your portion in the rejection block. Now you've got a small piece running. So you can, the best thing about my models is Model 1 gets you internal range liquidity. Model 2 is if there's a bull trap sitting in the middle here between the SIBI and the BISI. Model 2 is it tags the bull trap, sends it up to here. That's internal range liquidity. And that's, let's say you cleared out everything right at that premium. Then it went through it and you go, oh, it's going higher. Then use Model 3 to get the extension. Now, if you see it rip all the way through, it's like, great, now use Model 4 for continuation. You just get back in. You've unloaded your whole position and wait for the next model to manifest and then carry on. And the take profit models all support the change in the next buy model. And you maximize, it's just, they're great ways to maximize your profits. See how we're still coming back into premium box. 30.32. Either one of those two can set a new high. I want to see it bust through here though. If 27 right here to 38 just waffles around here, it means old Crazy Ivan's broke a rudder. Just going back and forth, around and around in circles. They don't want to see him light it up, go high. So this is like multiple attempts to get up there, right? 722, says Derek. I'll do you one better, my friend. I'd like to see 742. 742 to 749. And if you pull the fib from low to high, look where 70% optimum trade entry is. Oh, 70% is 709, just above that high and filling in the rest of the SIBI. So we're just bouncing off that 62% range there. Look at how much chop we've got here. Hate that. Typically I go, I'm going to sit out. If it's chopping around like this, I'm going to sit out and wait for something, wait for the Model 4. So in this larger range, Model 2 would be trade above this candle here, come back into it, find its support, and then low-hanging fruit inside the next range. But you got to get a body above there. See how the bodies aren't above it yet? ILR premium. Internal range liquidity premium. 722. Yeah, that puts you at 75 to 79%. I like the color of your fabric, Derek. Yes, indeed, sir. So that's not acting the way I want it to act. Now you see how we're below it? And you're still inside this guy here, though. So that would put you at 647 is the bottom half of the no-go zone to go higher. Hans, how are you doing? How's it looking over there in Holland? Holland, right? You're in Holland? I agree, Kevin. I agree. I agree. Denmark. Still summer in Denmark. We're having a pretty good weather here too. We had some big rain. It was super hot summer, and then suddenly it's rained a bit. Everything's all greened up again. Those poplar trees, I hate the fact that poplar trees are the first indication of fall. And we've already got colors starting to turn yellow already. And we're in August. And I'm like, looking at the tree, what are you doing? You're like a month way too early here. Slow down. You see a patch of the yellow starting to form on that tree. You just go, ugh. It's the first indication that it wants to go to hibernation mode. So we're just chopping around in here right now, but we're still inside we've ran above the premium and we're just coming back into it to get our launch, and we're not getting what we want. So here's where you have to decide as a trader how much of this you're willing to take. And if you're patient enough to say, you know what, my stop loss is sitting down here and that's where it's going to stay. If I take the loss, I take the loss. I've already paid myself here. I made a risk-free trade. So I'm going to still get money out of this, but it won't be as much as I was hoping for. Good. Then you move to the sidelines and wait for your new setup. Done and done. Yeah, I agreed. This is when it takes off, Derek, when you decide to go golfing. Ugh. Anybody else want me to look at anything? Is there any specific charts you want me to look at? Any asset class you want me to look at? Any stock? I'm happy to have a look at it and give you my 5 cents for what it's worth. It's not even 5 cents. You don't even have to pay for it. I need to spend a little more time with the girls this morning and see how they are doing today. Do it. Do it. See the buzzy bees. And our little guys down underneath our pad there, they said the best thing to do is put out some sugar water for them. When the flowers are scarce, put out some sugar water. So I put a bunch of sugar water. And the ants, I'll just count. The ants just come and committed suicide in it. It was filled with ants, and they're all kind of drowned in the bottom of this sugar haven. They're just lying in the water. You can see the ants with the little smiles on their faces, like, dude, I don't know what this was. It's the best nectar ever. And I put these little caps, colored caps out there, so that make it look like they were flowers. the ants all came around the rim. You can just see them all sitting there on the rim, and some of them just fell in and just like, I've died in heaven, and they're on the bottom, and then more of them just slowly accumulate on the bottom of the bottle cap, or on the bottom of the milk jug cap or something. It was nuts. Anyway, poor ants. It's their alcohol. It's their party. See how that's not acting the way you want? And look, now it's getting all sloppy and we're getting back into this range again here, right? It's starting to fail. If it's not tapping and going, you decide how long you want to stay inside that and or move to the sidelines and wait. And if you're super patient, then wait right here. And if it tags here, which is what we're talking about, you want to be one tick below that low. That would be your stop loss that you've entered in here. If you paid yourself there, you get out there. I need to spend on 2 inches of rain yesterday. They are starting to turn the drones off. Oh yes, death makes 1-to-1 sugar water a good carbo treat for them. Yeah, but I haven't seen one bee touch it. I haven't seen one bee in there. And I put it right next to the open too. So if it's just a fat bee who doesn't want to move, doesn't want to, he's a drone that doesn't even want to work. You know, he's one of those entitled bees that just wants to walk out the front door and gather up the sweet nectar. I've put it right there for him. So I'm catering to all the different ages of the bees, young and old. He doesn't even have to fly. You just walk out, drink to his heart content, then walk back in the front door. On M and Q, this candle or the next need to take out the highs or I'm getting out. Yeah. This is already broken through that level. Don't even like it. I'd be out by now anyway. I wouldn't even let that get hit because you don't want to see this stuff happening. That first indication we're going lower. And then finally another indication we're going lower. And now you're about to get your stop loss taken. Boop, you're done. Now, if you're one tick below that low, right there, it still would have hit you, but now that spread would have kept you in. So it would come down and give you a kiss. Now, if it pops through you, there's the mean threshold of that candle, of that little bull trap there. So that mean threshold gave way right there. You trade through it. Tag the low. Trade lower. Hit this mean threshold now. Trade through that. Look for this mean threshold. Takes that low. Look for this discount box down here. And that's what we're talking about. If we break through here, we're back into some choppy, crappy consolidation. And there's your proof. Done. So you go, oh, you know, I was hoping this would be the big run of the day, taking off from here. And it's like, no, I'm not quite done down there yet. You already anticipated that. You're already prepared for that. You've already paid yourself for that. And you've already saw the first indications of that failing and not going any higher when we talked about all of that happens inside here. So hopefully you got that and you can understand that. If not, come back tomorrow. We're here every day for you. We have a small volume imbalance at 29,619. Which time frame is that on? Oh, it's on the 5-minute chart, he says. 21,569. Don't forget these down here. If you're on a 5-minute chart, Hans, don't forget the mean threshold of the candle. It's very important you remember the last down close candle's mean threshold is always important. As my wife would say, it's always important. She'd make sure you talk about all the T's. Important. So 602. Watch 602 on the 5-minute chart. Look at how that regular trading hour gap. See, we never came all the way back and filled it. That would be an awesome place to go hunting for this afternoon. We came back, we tagged the bottom of it. Still coming lower. Watch this level right here. Like this level. Retest, short, low-hanging fruit inside the consolidation. Hunt for discount, box-to-box run, or box-to-box run. You've gone from box, through it, come back through it this side, through it again. So when you get once, twice, 3 times, 4 times through that level, move to the sidelines. If it's not, let me get rid of this one here, because this one is getting kind of confusing. So I'm going to remove this and put in the premium box here like this, and call that the premium, and see how many times the premium was finally broken. See, we barely got above it here, and then rest of the time we pretty much stayed on the top of it. Broke through it on the downside here. So it gave way finally. No distinctive bull candle getting above us here, right? Yeah. If that one closed below, what's that candle there? That's 646. What's the close of this candle? 646.25. The close of that candle. 646.75. So it actually closed inside it. So you didn't get that one. That's like razor's edge stuff. But we do have a swing point here. This breaker, this mitigation block that did not take out a high. So you traded through it. You traded back into it right here and went lower. Difference between mitigation and a breaker, I suppose. Now watch this discount box here on a 1-minute chart. That's the consolidation, premium, and discount that you need to see turn into no-go zones, Model 3s and 4s off of these areas once they get broken. The foragers get the nectar through, not the foragers get the nectar, though not the other ones. Oh, they're not. There's certain drones that just stick around and build shit inside the hive, and the rest of them, the foragers, go out. Is that how it works? I see a strong desire for lower prices and a minimum desire for taking higher stops. Yeah. If I get my wish, we'll get the full fill today of that downside target of 524. 524, 529, somewhere around there. That's my downside. Or look at that, midnight open range. Always hunt when you start getting that close to your midnight open range. Start looking at that as your target. That's 4. That's perfect. That puts you right in the rejection block of the daily. the rejection block of the daily start way down here is like 487. So it's right here. That's where it starts. So that'd be the downside target. Wait for it to pop through here on a close. Come back and utilize this as support. And again, like this over here, if you see it break through it, you want to see it rip out of here. Same kind of thing. We don't want to go back into another consolidation where we just come down, tap it, roll back through it, use the bull candle again, and we're going to start to compress. You're going to start seeing this get smaller and smaller until lunchtime. After lunch, pop up, run down, and take it lower. 5-minute chart. There's a tiny one at 636. To 637. That would leave this open. Institutional order flow entry drill for a continuation on the downside. Break through the mean. See how the mean threshold in the 5-minute? See how that's holding? Did you get your volume imbalance, Hans? Because you talked about a volume imbalance at 619. 619. 619. Right there. So we're using your 619 as a punch point to punch it down. And you want to get some legs here. Let's go. Rip through here. Come back. Give it a little kiss first before you take that low. That's a model 3. And then model 4, just come back into that candle and drive it through here. That's ideally what you want to see. We also have to take into consideration, you guys, time and price. What's the time? Are we getting near lunch hour now? Is there a higher likelihood that we're going to go into a consolidation through lunch? Or is this like one of those early morning kind of hit it and just smash it out of there, right? So time and price are critical. And if you're not getting that level, leave it alone. Walk away today. Come back tomorrow. Your powder's dry. You didn't take any losses. Or if you did, they're small wins or small losses. You stay on the horse like this. Imagine this is a daily chart. And you're in this for weeks on end now. If you're one of those more patient people that can wait weeks, or this is a stock you've been waiting for in April, right? You're waiting for that April or March into May, a 2-month run. And this is like a 2-month run into May. May makes the high, does the reversal, and comes all the way down into July, August lows. No different than a 1-minute chart bouncing around inside an hourly chart. No difference, boys and girls. And if you invest in a stock that you like, that gives you that seasonal tendency, here we go. Come on, punch it. There's that low taken. Pay yourself. Pay yourself. $29,533, says Hans. 29,533. What are you looking at, Hans? What time frame you on, Hans? Talk to me. Talk to me, Goose. Where are you? Drones don't do anything but mate. That's it. That's what I want to be. A bee drone. Because that one took me out with nothing seen to go get back in. So I'm done for the day. Enjoy the day. I'll see you tomorrow. See you later, Derek. Take care, bro. Take care, man. Enjoy your golf game. Last week's low on the PDL, previous day's low. Oh yeah, okay, I see there. 4 hours, 5:36. So now you got a model 4, a continuation model. I want to see this continue, reaching for my next target. Previous week's low, not previous days. I see I'm not into the week yet. I haven't seen that week. Let me have a look at the weekly. Oh yeah, right there. We just hit the 555 on the weekly imbalance. The daily imbalance, see how that daily imbalance, we hit the bottom of that. The weekly imbalance was just a little lower. We've hit that one. So now, let's have a look at what's going on here. What's going on? Now you're looking for last week's low, which is that 535 that Hans was talking about. Our midnight open, if we tend to run through that, start the target for our midnight open, and we'll look at the freaking run we got next. So if you're looking at a weekly chart, look at these. We've got an imbalance down here still. We've got an imbalance down here, and we've got this massive BISI to trade back into. Look at this punch now. Let's get back down to that 1 minute. Can you feel that? Can you feel the love? Right? See a model 4. Just come back and give a little tippy tappy. All the way up to here. Mean threshold. I don't want to see it come all the way back up there again and slop around here. Just give us a quick little tap here or a run back up into this mean threshold of this. I don't want to see any more than that. Let it rip. Let's get down into this midnight open we talked about. Hans is about to get his 535. 535 for Hans is right here. 535 right there. I like it, Hans. I like it. I called for 150-ish points this morning. And the mean threshold of that candle will give me the 150 at the open. 529, I think it was for. Right there. Well, we're pretty much around the same spot, Hans. 531. So the top of the midnight open range is my 150 points I was calling for this morning in the community. It's going to land on you like a little snowflake there, Hans. Here's Hans with his little tongue out and the snowflake gently landing on the tip of his tongue. That's it. Catching snowflakes on your tongue. It's been some awesome analysis this morning, you guys. I've enjoyed the calling of this market this morning. Today's show brought to you by the letters O and yeah. Oh yeah. We can see a nice little tag of boom. There you go, Hans. Celebrate good times. Come on, where's the carrot? We haven't used the carrot in months. Han, look at that, Hans. The carrot right on the beezer. I can hear it right now. Celebrate your party with you. Come on now. Why would you go work, Hans, when you can come here and make your daily wage? All right, our next goal. Now we've given Hans what he wants. Let's start looking at this edge of the midnight open range and then our midnight open. If I hit my target, yes, I have hit my target too. My target's at 30 right there. Boom. There's my 150. That's the call I gave you this morning. Done and dusted right there. There's the midnight open range. Now, if we're really going to get greedy, let's keep hunting down here. Hells yeah, Hans. Hells yeah, brother. Another guy saying, "Oh, your SEOs are not well, or you're not doing them right. That's why you're not getting any traction, subscribers." Oh, those guys give me that bullshit. How many guys have tried to sell me on that crap? I've had at least 2 or 3 that I've tried, and none of them have actually boosted any traffic flow to the site. So they're all saying the same freaking thing too. So it's like, I don't know if it's a robot, but the words are the same, just another name attached to it. We're like, okay, just piss off. All right, so we've hit this perfect level right here, the outside range of the banner open. There's the 150 points I called this morning. Now I want to see if we get a change in direction right at 11 o'clock here. And depending on how hard and fast 11 o'clock runs will determine what we're going to do at 12. Whether 12's going to, if we're just going to run up into 50% of this range, we have 2 bull traps sitting right here, or this, we'll just take the big one. And I want to see if we start to push hard through that, get through the premium, which is right up in here at 673. Clear that bull trap out, and then we're going to keep running. That'll be our, I think, our low set for the day. So that mean threshold I was looking for on that daily, that's the level we're looking for. It happened to also overlap with the BISI high. There's the retest of the low. Now, do we bounce off here and start to make another leg down? Or do we start to eat through that mean threshold of that candle and then start to dig through the no-go zone, get on top of the no-go zone, which happens to be with the bull traps, and then start getting through the next premium level inside the range, Model 3, Model 4, continuation. Yeah, it's huge weekly BISI there, Russell. I wasn't here from the start of your show, Darren, but I'd be interested to know how much higher interest rates affect your market analysis. I can't give you any opinion on that, Hans. I can't give you any opinion on that at all. If interest rates go up, apparently it causes a strain on the market. So if the interest rate stays where it is, I would imagine we'd start to climb back up. But if interest rates increase, which they need to cut, if interest rates increase, then we should see more strain on the market typically and see it go down. But it doesn't play a factor because I sit in the market so tight inside the market. As my buddy would say, you sit on the leaf inside the forest, inside the trees, or inside the trees, inside the forest. You play on the leaf, right? Because I watch the horse turning. So if interest rates affect the market, I will see it first. I will see it in a 1 minute, a 5 minute, and a 15-minute chart. So whoever analyzes all that interest and rate fundamental stuff, and they say markets will turn, I'll go, yep, or I'll go, nope, I don't agree. And when it changes, I'll go, yep, I'll agree, because it will show on these lower time frames. So my emphasis is not on the fundamental side, it's on purely technical side. But it's because I look at the charts and I see it when they're turning like that. Like we've talked about how they're turning right here on a 1 minute chart and where exactly we want to see it turning, and it's doing it. So when the price comes in, remind me about that, because I think that's important. That we'll assume some things like fundamental. We have interest rates coming. Let's see how the market changes in interest. So if we can find somebody that says, based on the interest rates, we should see the market go lower. Great. If it does, then we'll look on these charts to say, where should it stay firm and keep going lower? Where do we support the narrative of going lower on interest rates? Being, if interest rates go up, for example. And we'll watch it. See how we bounced off that level? We wanted to see it come back down again. It does. If it runs through that level, we said the mean threshold was our next upside target. If we're going to start pushing through that, but this is a retest, come lower. That's a Model 4. And I gave you that long before it did it. And as soon as it takes that low out, you pay yourself. Right there. Pay yourself right there. That's a Model 4. Done. Model 3 would have been this wick here, come back up and tag that go no go zone and take that low out. That's a Model 3. It didn't. It just went straight down. So then you look for a Model 4, because Model 3 is pretty much built into this. I guess it would be this breaker right here. It didn't even get that. You got none of that. What about that guy there? Nope. So it ran from your Model 2 here, right there. So it breaks through it, comes back, Model 2, tag. So again, let's go back up here. This is our mitigation block. We traded through the mitigation, back into it, sent it lower, and just went straight through. You didn't get any more models from that. You didn't get this one. Went straight through. So then you get a Model 4 retest and go lower. Pay yourself, move yourself to break even plus the cost of the trade. Pay yourself here. You've got money in your pocket. Model 4 continuation model. We're starting to head for this guy down here, keeping our carrot on our midnight open. I hope that makes sense to you guys. So we're looking for that to turn there. We're thinking, great, now let's start to see this motor up higher, get some good aggressive candles. Nope, it just came back for Model 4 and drop lower. So now this right here becomes the next bull trap that you want to see market structure shift, get on top of that, and then start targeting those areas inside the next range that didn't get hit, right? So this ends up being a pop through here. Then we're expecting this level to get hit because you never got it. We're expecting, oh yeah, this level here to get hit. So there's the premium way up there. Never got hit. So premium, this guy, that's just a quick aggressive rundown. That's what you want to see, is this kind of stuff. Tap and rip. Just get out of here. Don't give you anybody a chance to get on the trade, right? Thanks, Darren. If we look at the US 10 year and US 30 year they are trading at high levels. Okay, let's go to that. Let's do this. Let's do it. Let's do it, Stuart. Okay, give me a blank screen here. One I don't really care about. There's lots of British pounds here now. Let's use this one. Let's look at these. Let's look at the interest rate, or this, what is it, the 10 year and the 12 year, US 10Y, US 10, the 10-year bonds. Okay, so let's look at that. And, ooh, that's crap. What have we got? 10 year, oh, that's 1 minute. We want to go to a daily chart. All right, so this is the bond market, okay? So let's look at our 4 models. Again, I told you you can trade 4 models, will trade any market. Doesn't matter what the market is, it will trade it. So let's mark out right now our premium and discounts. So we've got these lows been swept here, right? So we have a discount here. So just kind of put these on your chart so you can see everything we've talked about this morning. You're going to see this in your charts, right? That's the discount. That's the discount. Zoom in. Did we break? Did we close above it? Yes, we did. Did we come back and tap it with perfection? Let me zoom in again so you guys can see this. Did we tap it with perfection? We tapped it and left. Did it? Was there a news event that day? Or did the markets have a certain volume and stuff they paid? No, that's exactly what we've talked about every freaking morning. That's a Model 1 entry with precision right there. That would be level, that would be Model 1 entry 1, entry 2, entry 3. And you bring that down to include that. All right. So that's a perfect entry for a long. So you're expecting interest rates to continue to go higher. What am I looking for? If you're in this interest market, you're saying, if I'm going for a box-to-box trade, hunt up inside here for a box-to-box trade. There's nothing inside that one except for over here. So you draw the premium box out That's our premium. And I go, if I trade up into that, I'm going to sell out when I hit the 50, or I'd use your take profit model 1, 50, 62%. And let's do that one. I just want you guys to share the whole model sequence as well. So take profit model 1 would be, I enter in right here, pay myself, take half the trade off there, move my stop loss to break even. Okay. As soon as it hits 62%, I pay myself. Take another 10% out and move my stop loss to 50. So if that came down here first and then went up there, great. Finished off right there. So you've hit 60%. Now you wait. It starts up here. So it starts the day off up there. So you quickly pay yourself take another 20% of your trade off. So you've got 80% of your trade is off, 10% is left, and it goes boop and takes you out right there because that's where your stop loss trails to. So you're done, right? And what's it doing? It's coming back into our first trade's here. Second trade would be the first bull candle to the left. Okay, first bull candle to the left. I look for a retest of that. So I want to see a body close above it. Does this close above that candle? Yes, it does. Does it come back and retest it? Yes, it does. What does it come back and test on? The most important LITS line that you hear me say every freaking morning. LITS, line in the sand, is the mean threshold of this bull trap. With perfection again, we have another entry for a long. Right? As soon as it takes out that high, you pay yourself. Next day, takes it out, pay yourself. Okay? We're still inside this larger range because we're looking for our discount and our premium. We hit the premium. Okay? So there's your first line in the first box. So I've given you 2 perfect entries there. If we go to the next one, body trades above it, comes back in, hits it right here, and right in its open, or it's closed right there, delish, sends it up higher. We're inside the premium now. Now what I want to see is I want to see this premium break so we can do a model 3. So this is a model 1. Model 2 is a retest of the bull candle, right? There's the retest. There's another retest. So it's a model 2. Inside the range, low-hanging fruit. Model pay up to the high of that. Takes it out. You go, great. Now I want to see these highs get taken. Trade back into this model 3. Trade back into the BISI. Look at that. With perfection, it fills it all in and then takes out the highs. Done. So even on a bond market, it works. And that's a 10-year daily bond. Have I convinced you that it works? All right. So we got a swing point here. We have a new premium forming. We trade through it. We come back inside it. Consequent encroachment. Run lower. See how it works? Runs all the way back down. We're inside. We're looking for this swing point here now. I want to see if that mean threshold there gets tagged. And then I'll see if we get through that and start reaching back into this discount box here. And if it doesn't, if it keeps running back, I'm looking for this to our Model 3 extension and then a Model 4 continuation. Through it, to it. Now we want to see that go higher. And if it trades back through that, I don't want to see this mean threshold break. If it does, wait for it to break through here. And that's another old premium I expect to see support at, or break through it, use it as support to run for a discount box down here. So this I want to see motivated for a Model 3 now, go higher. And that ran, took out this high. We're at the mean threshold of this candle or this wick right here right now. And now you're back through it. So you have to decide whether or not you're saying, I'm out now. Are we going to go into a consolidation, or am I going to swing down lower? And again, there's your line in the sand. Boof, done. Finally took out the high there. Done and dusted. This retesting old little bull traps inside here. And look, we went way up there. Okay, so changing direction. right inside here. So here's your next level of premium. Trade through it, trade back into it. We're coming lower. Discount box is down here. Premium discount inside this leg right here. And that happens to touch the old premium. Look at that. Right into it. So you pay yourself box to box inside that range. Anyway, let's see where we're at right present time. We're into some if you want to keep really precise, we go here. If you want to give yourself a little more conservative, you go to the close and the open of the level that makes the SIBI. Okay, you're into that. You come all the way down to the bottom. Now you want to see this continue pushing higher. Now that we haven't got we've got a body above here, so we can come back into a litz would be something like there. You can get a bit of a wick, tag this old high again, and then, or the high of the SIBI here, and keep going higher. If we start popping back through here, this consolidation breaks to the downside. You want to see this level here get used as a go, no go zone for it to run back down inside that range. And you got to hunt in here for imbalances. So we got this little tiny price imbalance here. But right now you want to see price being supported and going higher. This candle's been activated and armed. So it's high, it's open, and its mean threshold. You want to see hold price. It's also inside a level you want to see hold price and keep pushing higher. So interest rates go higher. What's that going to do with your market? When interest rates go up, that tends to put pressure on the markets to go down. Okay. So could we expect more downside in the markets? Well, we've got plenty of room on the weekly below us. If interest rates go up, if they go down, that's going to affect, that's going to allow us to rally the markets. And we'll see that. Looks like we're really bouncing off your 534 level there, hey, Hans? So now, see how we've activated this? We've armed it. Now you want to see a trigger, a tap, and go. And if you lose the mean threshold of that candle on a close, look for this SIBI down here to get tested one more time. There's the tap. That's the trigger. Fire off. Thanks, Darren. If we could use it to, and the 30-year on the daily chart, they are trading at high levels. Look at NQ daily, July 12th or July 26th. July 26th. Yep. Look at the August 6th candle. That's the one I'm looking at, Russell, for the 150. When I was looking for the 150 low today, was the mean threshold of that candle. July 26th is right there. That's the bull candle. Agreed. You've already tagged it once, though. You notice that? You see how the August 6th candle tagged that bull trap? Once we broke through it, come back, retest it, and go higher. That's what you want to see, right? So now the fact that we've actually created a turn on August 13th, if we take out the August 11th candle on a close, changes up my whole perspective about the market right now being quite bearish. But that's what we're expecting in August. This week in August, the third week of August always tends to be the little swing point. 18, 19, 20 tends to be the swing point. Go back through your charts and you look at August and look at the second to third week of August and tell me you don't see that. Go back through your charts, you'll see. I think that's going to be it for me, you guys. There's the retest, see? Triggers pulled, bang. As soon as it takes that high, you pay yourself. It's the very next high. Move your stop loss to break even. You're in a zero stress trade right now, and now you're on a turn right off of a Model 3 extension or continuation. You want to see this continue going higher now. You don't want to see it come back and retest that mean threshold of that candle. You don't want to see that. So you've paid yourself at the high. Your stop loss is sitting at break even. Let her buck. This candle's now been activated, armed. Trigger is 1, 2, 3, the midpoint, and now you want to see that go higher. You don't want to see that midpoint break to the downside. Then it's sloppy price action, and I don't want to see it. Do you get that? Anyway, hope you enjoyed that today. That's my show. Thanks for tuning in, you guys. As usual, if you like it, thumbs up. If you got something out of it, great. Share it with a friend. And I'll see you guys tomorrow. As usual, sending the love. All the best to you guys. And I'll see you. Look at that. See? Delish takes the high. Move your stop loss in here and say, I don't want to see it come back below here now. And let it run. And we've given you the perfect entry to end my day. Mic drop. See you guys tomorrow.